Meantime, the COVID-19 pandemic seems to have taken a back seat at the moment as all eyes are on the outcome of the U.S. elections. Volatility in the global markets increased ahead of the election, and with the outcome of the presidential race still uncertain, the volatility is expected to continue not just in the financial market, but also the oil market. And that's raising questions about the impact of the election on the global markets in the coming days and weeks and what it would mean for Nigeria. I'm being joined by the acting managing director at Quarters Capital, Gbolahan Aina, to discuss this. Good morning, Mr. Aina. Thank you for joining us on the program. Now, how keenly are you watching this U.S. election, and what does it mean to you as an investment and market analyst?
Good morning, DC. Thanks for having me. The U.S. election is quite important, not just to me, I think to everyone, and because of what U.S. represents. U.S. is the largest economy in the world with GDP of over $2 trillion, and that is massive in terms of external debt as well. U.S. they are the largest external debtor to the world as well. So people really want to know what happens in the U.S. election. In terms of crude importation as well, U.S. they are the second largest importer to crude, second only to China. Last year they did about 132 billion in terms of the total importation. U.S. also have the largest stock exchange, which is the New York Stock Exchange as well. So all these things that people are watching, they are quite important to a lot of people. We love Nigerians. We know that a lot of people have migrated to the U.S. as well. And recent times, some policies by Trump as well has affected a lot of Nigerians as well. So Nigerians are watching, China is watching, Iran is watching to see the outcome of the election. So it's quite a big news. And I believe the results of the election are also going to affect the oil price, like you said. Maybe not an immediate impact. For instance, is being against Iran because of certain sanctions as well that have kept oil supply a bit abated. We expect the Democratic candidate, which is Biden, to losing some of the sanctions, so we might see some oil returning back to the market. But by and large, a lot of people are watching to see the outcome of the election because it affects markets, affects industry, and it's going to affect the oil market, like you said.
About the impact on the markets now, do we expect an immediate market reaction from the results, particularly the currency and the fixed income markets?
Okay, while you are reporting, though, you mentioned that to run up to the election, we saw a rally in the oil market. Before the rally we saw on Monday, there had been a decline when we began to see some European countries beginning to lock down a second wave of pandemic, so there was a bit of lockdown. And because of that, that has significant impact on oil prices. But in terms of how does it impact our market, really, I don't see significant impact on our market. And really, the way investors view Nigeria is usually an oil play. Really, whatever happens to oil affects Nigeria. And also in terms of the FX regime or the FX currency. So while the U.S. election might not have a direct impact, I believe U.S. election is going to have a correlation with the oil market, and that's going to affect Nigeria's revenue because really the end per dollar, most of our revenues are in dollar. So if dollar is affected, our exchange rate will be affected, our revenue will be affected, and of course our investors view Nigeria will be affected as well. If you're earning a lot of dollars, for instance, that means you're going to have LD external reserve. That means there's going to be less pressure on the exchange rate. At the moment, exchange has a bit stabilized, and that's because oil price has a bit rallied up a bit. Remember earlier in the year when we had the pandemic, oil price came down to record lows, but over the course of the months, oil has stabilized a bit. So the outcome of the election, like you said, is going to have like a major factor. If President Trump should win, for instance, we expect status quo. We're expecting to maintain the sanction already on Iran as well, and some certain trade war with China as well. But if Joe Biden wins, we expect some of those sanctions to be relaxed as well. And that might say about 2 million barrels of crude coming into the market daily. That means that's going to increase the glut in the market. That probably portends that oil price might come down a bit, and that might also affect in terms of the revenue Nigeria is earning from oil receipts.
All right,
In terms of
Mr.
the
Aina,
market,
Mr. Aina, we'll get back to you in just a moment. We need to reconnect with you to touch up on your audio a bit. But while we wait to reconnect with Gbolahan, let's just do a quick recap of the crude oil markets. Of course, earlier on, we told you that oil prices are up about 2% in early trade today, even as everyone is waiting for the outcome of the U.S. presidential election. And then industry data shows that crude inventories in the United States fell sharply. Looking at the prices now, US WTI was up 2.1% at $38.46 a barrel, and Brent crude was 2% higher at $40.51 a barrel, and that came after trading between $39.85 and $40.70 earlier. Oil prices fell more than 10% last week, and that was a result of global coronavirus cases, which has continued to skyrocket, and more restrictions on movement are hitting demand prospects. U.S. oil has nearly recouped those losses in the 3 days of gains this week so far in the run-up to election. All right, let's continue our conversation with Gbolahan Aina, now the Managing Director at Quadras Capital. Thank you for hooking up with us once again. Now, let's still dwell more on the oil markets. Of course, it's been preoccupied for months with concerns surrounding weaker demand driven by COVID-19 economic restrictions. But then the U.S. presidential election has started to take center stage as traders weigh election win scenarios and the potential outcomes for the energy sector. So what would a Biden win mean for the oil markets, and what will the Trump win mean for the markets as well?
Okay, thank you, BC. Like I mentioned earlier on, if Biden should win, certain sanctions that were with Iran, we expect that to be relaxed. So if that is relaxed, we should expect about 2 million barrels of oil coming back into the market, and that means the supply glut is going to increase. Biden also mentioned that the trade relations with China as well is expected to be losing. So certain trade policies, and that's going to mean an uptick in exchange of goods and a spike in demand for maritime bunker fuel as well. So while that might be, so that's going to increase the oil supply, and like I mentioned earlier on, that might mean that there's going to be a reduction in oil price, which might not well be too good for Nigeria. So we've seen OPEC Plus rather in the past couple of months. They've maintained a production quota, and so they want to maintain that quota to early next year, 2021. So a Biden win, like I said, will mean lifting of restriction on Iran's oil exports, which could add additional 2 million barrels to crude oil supply. Given the oil outlook, this means lower oil prices with negative impacts for Nigeria. A Trump win means status quo, and that means Iran's sanctions will be maintained, and that might support oil prices or keep oil prices afloat, currently averaging about $40 this year.
Now, what elements of this election do you think is critical for investors, particularly for Nigeria?
Okay, beyond the election, why I think the election is very important, beyond the election, I think the COVID-19 narrative is still going to have a major impact. You were mentioning earlier on that so there's been a bit of lockdown by certain European countries because of the second wave of the pandemic, and that's going to mean a reduction in global travel from the fresh lockdown. That's going to definitely reduce demand for crude oil. Global trade is also expected to slow down if you have a second wave. So we expect to see slower oil prices, which of course is going to be negative export earnings. What we also expect is that, sorry?
Go ahead.
Yes, but how does that impact Nigeria? Like I said, for Nigeria, it's always an oil play. Earlier when there was the lockdown, we saw a lot of supply chain disruptions, and of course that had impacts on importation of raw materials, and that also put pressure on domestic prices. But like I said, that's going to impact how people demand for oil, and if there's a lot of demand for oil, for instance, that is good for Nigeria. But we expect to see a lot of gluts as global travel reduces, as there's lockdown, manufacturing firms cannot do as much as they were doing before. So it's going to be more of a COVID-19 play more than the U.S. election results.
Now, away from the impact on the oil markets now, oftentimes the Nigerian equities markets don't react to some of these external factors like this election. Why does that happen?
What's so sometimes they do, and for the Nigerian equity markets, it's usually how people view oil because Nigeria basically in oil. So if oil is good for us, people think the Nigerian economy is going to do well, and also our exchange rates. So the FPIs have been on the silent for a while because of certain FX regime. So if they are comfortable with the FX regime, if oil is good, can see a lot of FPIs coming back into the market. However, for our local investors, the PFAs, national investors, for instance, um, if you backtrack about 2 years ago, we had high interest rates, and so rather than investing in the equity market, we're investing in fixed income instruments with high rates. But we expect to see impact, and we've been seeing a lot of impact in the equity market of recent, and really because of low yield environments we've seen. So while we might not see direct impact from the election, I believe we're going to see a correlation in oil price because of the election, and that's going to impact our exchange rates and it's going to impact how people view Nigeria. So there's going to be sort of an impact on the equity markets.
All right, while we wait to see that happen, let's talk about the trade relationship between Nigeria and the U.S. Of course, there's a two-way figure estimated at $9 billion. Is there any likelihood that that has been affected in any way?
Well, so trade generally has been affected, not just because of who the president is, really because of the pandemic that we've seen. But like I was saying, the Democratic Party, they are more liberal. So, and hopefully, well, not hopefully though, if they win, we might see an increase in terms of trade relation with the US. If the Republican win, like I said, it's going to be status quo. But what is really affecting market generally is currently the pandemic, and that's really affected trades. So if the election goes either way, I think you can see a vaccine quicker than before. That might affect how people begin to transact in the coming months.
But when it comes to foreign trade, in terms of major trading partnership by percentage share, the U.S. comprises 10.6% as at the second quarter of this year. Are we likely to see a change in that status in the third quarter?
No, not in the third quarter. So I guess in 2021, that figure will change. And it's going to depend on two things, the outcome of the election and also the pandemic. Have things improved? Are we having a second or third wave?
But in the area of capital importation now, the United States is one of the top sources of capital importation to Nigeria with an estimated $126 million as of the second quarter. Do you see any form of impact there?
Oh, yeah, definitely. So if you even look at capital importation figure, it has reduced significantly. One in terms of remittances, one in terms of FDIs, and one in terms of the FPIs as well. So view of exchange rates has been either here or there. And also, since we had the lockdown, the pandemic, a lot of remittances that we're seeing in the country were not coming as we used to have it before. In the past, remittances were even more than oil receipts. That has changed a bit. So it's like you rightly said, it's going to affect capital importation, and it's likely so it's going to still be sustained.
Now, let me take the conversation back again, talking about crude oil now. Of course, when you look at the mandates of the two presidential candidates, former Vice President Joe Biden has said that he will put a stop to shale oil fracking. Do you consider such strategy as positive for Nigeria-U.S. bilateral trade as it relates to the U.S. resumption of Nigeria's crude oil purchase?
Yeah, so that's positive for us if there's a stop to fracking. Because the guys that ultimately the oil supply is going to be reduced, so that's positive for us if there's a stop to fracking. But whether he's going to go ahead with that, that's another thing. But that's good for us in terms of our bilateral trade with the US.
But what about the impact it will have on Nigeria's oil revenue?
Yeah, so the impact is going to be positive because supply is going to be reduced. Usually, like I said, it's a demand and supply dynamics. If you have a lot of lots in the market, that is not good for us as a country. That affects our crude oil price. And of course, if we have low crude oil prices, that means we have low oil receipts. So for us, we usually want to have at least oil price stabilized. That means we're going to have increased oil receipts. We're going to have short up reserve. We're going to have stable external reserve. So that's why the OPEC Plus, they've been having a production cut.
They're going to meet on 3rd of November again this month, and we expect them to maintain the production cut up until 2021 January.
So how should investors begin to align their investment portfolio now?
Okay, so two things for Nigerian investors, and one is to recession-proof their portfolio. We expect to go into a recession in Nigeria, so it's always good to have a recession-proof strategy. Also, we expect headline inflation to begin to tick up. Currently at 13.7, we expect to cross 14%. So whatever strategy you're going to have, you're going to have investment that can provide you capital appreciation, can provide you inflation edge. And at the moment, we saw yields on Eurobonds begin to spike up when we begin to see the second wave of the pandemic. So investors want to have some of their investment allocated in a stable currency. The US is a reserve currency. So you want to have some of your investments in stable currency that can give you that exchange rate buffer. You can consider maybe a mutual fund denominated in dollars. You can consider buying an Eurobond, because even at the moment, Eurobonds at the moment offers you a premium to local FGM bonds. So at the moment, Eurobonds, for instance, Naira Eurobonds for a 5-year tenor is about 6%. 5-year local Eurobond is about 3%. So that's an aberration, for instance. So you need to recession-proof your portfolio. You need to look for investment that can give you capital appreciation. And equity might be somewhere to look at the moment. At the moment, most money market instruments are doing lower than 1%. That is real negative return. If you consider inflation at 30.7%, so you want to do equity market, there's some stocks that offer you attractive fundamentals. So two things: recession-proof your portfolio and have an inflation edge.
Now, if Joe Biden wins this election, is that likely to change the U.S. immigration decision for Nigeria?
I believe so. The Democrats are more liberal. I believe they want to change a lot of immigration policies, not just for Nigeria, for a lot of countries that have been affected. They are the more liberal party, so we expect that should change a bit.
Acting Managing Director at Quarters Capital, Gbolahan, Aina, thank you for sharing some of your time with us this morning.
Thank you very much.
When we return in just a moment, we'll be talking about health infrastructure and entrepreneurship.